Time to find out what the grain and livestock markets are doing. We'll go to the CME Group trading floor in just a second. On the corn market, we opened up under a little bit of pressure this morning. We were roughly about a penny and a half lower, and now we're almost back to unchanged. December corn just down one tick. Last trade 363.5 per bushel, and the March down 1/4 cent as well at 375.5 per bushel. On the soybean side, we had that overnight export sale reported. It was a big sale. It was to Mexico for 650,000 tons and then some. It was for the current marketing year. Surprised a lot of folks in the trade with that huge of an amount. And the soybean market did trade higher after that. Let's take a look at what it's doing right now. On soybeans, well, we currently have that November contract 5 3/4 higher at 851.5. You know, it opened roughly about in that level there, and then it sold off a bit, but now it's gaining a little bit of steam again. January 5 1/4 higher at 865. I'll stop right there, and with that, let's go to the trading floor in Chicago and talk with Scott Gecas, and he joins us right now. Scott happens to be with Longleaf Trading, and Scott, what's the trade talk on the floor there about this deal with Mexico overnight?
Yeah, that deal with Mexico was very big. It's very surprising that you'd seen a big lift in the market overall. Even with that export news, you know, there's still supply concerns. China's they're starting to run it at a deficit with their soybeans. So we're going to see if that materializes to anything, see if they start buying U.S. beans. He continue to buy from Canada, Mexico, as well as Argentina. Haven't really hit too much in the U.S. market yet, but there's also rumors that Mexico and Canada are buying U.S. beans and selling to China as well. So, you know, we're waiting for, you know, positive news out of that, anything that is really going to materialize out of that. But, you know, going forward today, everything's focused on the FOMC meeting as well as the ending stocks report that's going to come out Thursday after the close, and we'll see how the market reacts to that on Friday. For soybeans, the estimate's roughly around 398. On the high end, it's around 4.0125. So we're going to see how that's going to really play out.
So reading between the lines on that purchase from Mexico of U.S. soybeans overnight and such a large amount, do the traders think that Mexico sees that as really good value right now in the soybean market, that they think that may be their best chance for a while to get a decent price?
Yeah, and that's what everything's going across the board, just as far as worldwide exports and stuff like that. So with the FOMC coming out and with the expected rate, I mean, that's definitely going to add cost of carry issues. So that might be one of the reasons why they went ahead and got that before the rate decision today. Okay,
let's take a look at the wheat market this morning. In Chicago, we have that December contract on the wheat now trading 4 1/4 cents higher at 525 even per bushel. And let's take a look at Kansas City wheat, where we have the December contract over there trading higher also. We have it at 527 1/4. That would be up 5 1/4. By the way, July is now 6 1/4 cents higher. And as we take a look at the Minneapolis wheat market, here you have your December contract trading about 2 3/4 higher at 583 3/4. Interesting that it's trading higher at the same time that the U.S. dollar is trading higher. That doesn't happen all that much either. So kind of an interesting dichotomy in the market here today, and we'll have to keep an eye on that. Scott, we'll come back here in just a moment, and we'll take a look at our cattle and hog market activity today, and we'll find out what all these reports in recent days and tomorrow may mean to the trade. We'll talk about it when we come back. And we're back talking with Scott Gecas of Longleaf Trading in Chicago. He joins us to take a look at our livestock trade. And in the cattle market, a lot of analysts have expressed intrigue at how the cattle market has really showed signs of strength in the face of very bearish information over the past week or so. Right now, it has turned mixed. We have October live cattle just one tick lower, about 3 cents lower at 112.32 per hundredweight. December, though, 15 higher at 117.35. And you have February unchanged, kind of caught in the middle there, at 121.55 per hundredweight. Now let's move on to our feeder cattle trade. And in the feeders, you have your October contract down 26 now. We're at 156.22, so well off our earlier high this morning by $1, almost on the low of the day now. And November feeders have traded 32 lower at 156.10. That's 2 ticks from our low of the day there in the cattle market. So we opened up firmer here in the cattle trade. A little follow-through buying early this morning, Scott. It's kind of vaporizing as we look at it right now. Any talk on the trading floor about why?
Yeah, I mean, the cattle market, it's a very odd dynamic. So you have all the fundamental news is absolutely bearish. That cold storage report was the highest on record. So with the resilience in this, it's pretty much due just to all the positive U.S. economy news. You know, consumer confidence is at all-time high, unemployment's at decent levels. So the U.S. economy is running on full steam ahead. So that's playing into the big supply concerns just in the protein complex across the board, whether it be cattle or the hogs. They're both running into supply concerns. So just being offset by that positive economic news. And the cattle right now, in the short term, we're watching that 112.50 as a very key support level.
And the lean hog trade seems to be doing kind of a high wire act here. Let's take a look at the current prices in Chicago behind you there. And on the lean hog futures today, we currently have October 40 higher at 62.82, but then you have December 40 lower at 57.35, and they have already had an extremely wide spread between those two contracts there. Yesterday it was around that $5 mark, a little less, I believe, but right now it's about $5.50 wide. So what is going on with that spread here in the lean hogs? All the deferred contracts are lower, widening out that spread today, but that nearby October, strong demand, I guess?
Yeah, well, it's the same thing as with the cattle market. So you're still running into big problems with supply. The cold storage report was negative. The one thing I want to point out in the hog market is the cash traded 79.5 the other day. That's the highest in about 2 years. So with that being said, the cash is really pushing the futures a little bit higher. That's why you're seeing a divergence between the different contract months. All the bearish news fundamentally is being offset by the African swine flu, the hurricane that came through in the Carolinas. As soon as all the Carolinas come back online, we're going to see how that production is going to affect the current prices. But either way, that swine flu in China is definitely spreading. It's not contained. We've got to remember when they represent about 10% of their Chinese herd is represented by all the pork that was traded last year. So, the early estimates are already above that 10%. Now it's just a matter of when are they going to come in and actually buy U.S. pork.
All right, and yesterday, cash plant-delivered hogs were over $1.50 higher yesterday afternoon. Scott, good to visit with you. Thank you, sir. Appreciate it.
Thank you.
Scott Gecas is with Longleaf Trading in Chicago. There's the latest information, Janet. A little bit of a reversal taking place now in cattle.
Thank you, gentlemen, very much.